Give me a few minutes of your life and I'll teach you the 80% win rate trading strategy that has helped me secure 500K in funding with Epics. And I'm going to reveal the entire strategy for absolutely free. I'm not going to hide anything. I'm not going to hide something for my mentorship or course. This is the entire strategy, and let's begin. So I'm not going to waste any time. This is going to be a quick video. I'm not going to waste your time. I'm not going to do the long talk, and let's start with it. So first thing first, what you have to do is notice the time frame, okay? So this strategy works on 3-minute time frame and above. So you cannot use this on 2-minute or 1 minute, 3 minutes and above. So you can use any time frame, okay? And first thing, here's the first rule. What you want to do is identify a swing low or a swing high. What is a swing low? Swing low consists of 3 candles, 1, 2, 3, and the second candle is the lowest out of all, right? So we have 1, 2, 3. The second one is the lowest. That is your swing low. And if I flip the chart over, a swing high also consists of 3 candles, 1, 2, 3. So the second candle is the highest out of all. So 1, the second candle is the highest, and the third is lower than the second candle high. Now that we know that, here's the entire strategy, okay? So what we have to do is wait for price to sweep out either the low or the high. So in this case, what we have is a low, right? Now, what we want to do is wait for the next candle or any candle to sweep that low, okay? But here's the most important part, right? The very first candle that sweeps that low, right? So this is the very first candle, and this is going to open around... All right, I think I have done some... Let's just keep this right here. All right, and I think this should be it. Okay, cool. So we have a low, and the very first candle that sweeps that low must close above its opening price, right? So it must close as a bullish candle. We sweep that low, and we close as a bullish candle. That is very important, okay? Now, the most important thing is that we should be coming from a fair value gap. Now, it doesn't matter if it's mitigated, it doesn't matter, right? As long as price is coming from a fair value gap on the same time frame, okay? So we are not looking at higher time frames. So we have a fair value gap, we had a low, price swept that low, and the very first candle that took out that low, most importantly, closed as a bullish candle. Now, what you want to do is simply take your entry, put your stop below the low of the candle, and you can go for 1-to-2 risk to reward ratio. Now, the logic behind this is a lot of sellers try to push the price down, but they got absorbed, right? So this is what I called TBV. This is my strategy, time-based volume, or in short, TBV. And that's the exact strategy that I've used to pass 10 funded accounts and get funded with 500K with Epics. So price sweeps that low, closes as a bullish candle, and it's also coming from a 3-minute fair value gap. And similarly, what you would do is that if you have a swing high, what you want to do is wait for the first candle, the very first candle that sweeps that high. It must close as a bearish candle. So let me make this really quickly, maybe like this. Okay, so we have a swing high, price, the first candle that sweeps that must close as a bearish candle, and it should also be coming from a bearish fair value gap, right? So once you have this pattern, right, again, the buyers got absorbed here. They try to push the price up, but within 3 minutes, right, we had so much action. So that just tells me that there are big players active in the market. So in this 3-minute candle, we had a sweep of this high. We are coming from a fair value gap. And most importantly, we closed below the opening price of this candle. Also, you could say that we closed as a bearish candle. Now, once all of these rules are met, you can simply take a short position at the close of this candle. And okay, I'm going to do the opposite thingy here. All right. So you're going to take a short position, put your stop above the candle, and you can go for 1-to-2 risk to reward. Again, I'm going to give you guys a lot of examples, and that's going to clear everything. So without wasting any more time, let's move on to the examples, and that's going to clarify each and everything. So here is the first example, and this just happened recently, and I was looking at this. So you can see that we have a fair value gap over here, right, on the 3-minute time frame. So we have a fair value gap, if I mark this out. And again, as long as the candle that sweeps the low is within the first candle of the fair value gap. So this is the first candle of the fair value gap. This is the second. This is the third. Fair value gap consists of 3 candles, right? So as long as the candle doesn't go below this candles low, we are technically still inside a fair value gap. Now notice here we had a low here, and the low, the swing low, can be above the fair value gap or it could be inside the fair value gap. It doesn't matter. What really matters is the first candle that sweeps that low. So we have this candle that swept that low, the very first candle, okay? The very first candle that swept that low closed as a bullish candle. Now we are inside a fair value gap. We have swept the swing low. We have the first candle that swept the low closed as a bullish candle. Now in that case, that would be a long entry. Your stop would go below the candle's low, and you can go for 1 to 2, or you can go for 1 to 3. Okay, you can go break even at 1 to 1 versus 1 just to be on the safe side, and then you can ride this trade. Let's move on to the next example. All right, here is another example that just happened recently on Euro USD. So you can see that we have this fair value gap around here, and we have a swing low, right? So 1, 2, 3, swing low consists of 3 candles. So notice here, we have a swing low, we have a 3-minute fair value gap. Now the very first candle, okay? So you can see this is the candle, the first candle that swept that low. Now it should be coming from a fair value gap, and it should close as a bullish candle. That is pretty much all you need. The logic behind, again, is that a lot of sellers, they tried to push the price down, break out of this low. But what happened is that there was a big buy limit order sitting around this area that pushed the price up. Now, within 3 minutes, we had so much action. So that just tells me that there are big players active in the market. So what you would do is take a long position here, and you would put your stop below the low, right? And then you would go for 1 to 3, 1 to 2 risk reward. Really depends on that. But it is so mechanical. You don't need higher time frame bias. You don't need higher time frame order flow. As soon as this setup appears, I promise you, when you take these setups, you're going to see yourself that the win rate is very strong. And that is how I exactly got funded with over 10 accounts and 500K in total. Let's move on to the next example. All right, guys. So here is another example. And one more thing, it works on all sessions. So it doesn't matter if you're trading Asia, London, or New York. It works during all sessions. So this is a short setup on Euro JPY, and again, it works with every pair, every asset, every crypto pair. It doesn't matter. This is how the algorithm operates. That's what I found. Okay, so what you can see that we have this high over here, right? And let's just go and mark out this fair value gap, right? Now notice closely. Okay, so let me just make this a bit softer so it's easier for you to see. So we had this high, right? And what happens is the very first candle that sweeps that high, it closes back down as a bearish candle, or in other words, it closes below the opening price of this candle. All right. So once we have a bearish candle, right, we are coming from a fair value gap on the same time frame, and most importantly, you can see that we have 1 high, 2 high, right? So you always want to look at the highest high that is around the fair value gap to be swept. Okay, if price swept, let's say this high over here and closed bearish, and we're not even coming from a fair value gap, right? Then that setup would be invalid. But since we swept this high, right, we closed bearish, and then that would be your short setup, right? At the close, you would put your stop above the candle's high, and then you would target probably like this low over here. That would give you 2.8, or let's go 1 to 3. Yeah, okay, never mind. It didn't hit 1 to 2, so you could go 1 to 3, so you can go for 1 to 2 risk reward. Let's move on to the last example. All right, guys, so here is another example looking at AUD, CAD. So it works with literally every single pair and asset, guys. It doesn't matter if you are trading futures, gold, it doesn't matter. So look at it on the 3 minute. I'm just showing you 3 minute. You can go and choose any time frame from here. So what I would do is use 3 minute, 5 minute, right? 15 minute, 1 hour, 4 hour. And of course, if you are a swing trader, you would use daily time frame. But notice what we have here, right? We have a fair value gap here. And what we have is a high, a swing high. So a swing high consists of 3 candles, right? 1, 2, 3. The second candle is the highest. So that is your swing high. Now notice the very first candle, right? The very first candle that swept that high closed back down as a bearish candle. Now that is all your criteria is met. So what you do is just take a short position here, put your stop above the candle's high, and then you can go for 1 to 2 risk reward. Now let me show you an invalid setup that would form, right? So let's say that there was a fair value gap here, even though there's none. So let's say there was a fair value gap, and we had a high over here. Now notice the very first candle that swept that high closed as a bullish candle. Even though it did push down, it's not going to work out every single time. And you want to avoid this, right? When we sweep the high, the very first candle that swept the high closed back as a bullish candle. So that is invalid setup, right? So yeah, I hope that video helped, guys. If you want to see me live trade with this strategy every single day on my 10 funded accounts and more, There's a link down in the description and see if you're a good fit. I'll see you guys in the next one. Take care. Goodbye.